I think it's too early for anyone to assume that the Fed is going to increase rates.
Yeah.
I mean, one thing is granted that they will not cut rates. And that changes the beginning of the year narrative that when everyone thought that inflation will peak out, Fed will hit a pause button, and then the drop in the US economy, in a sense, could really force US Fed to cut rates. What's important here is that ahead of the inflation data in last couple of days, US markets have slipped into what could be called as the September seasonality. The Dow has done precious little, Nasdaq has done precious little. After that big bumper rally, what we saw in some of the US AI denominated stocks and post the Nvidia numbers, none of the global big markets actually are showing any kind of an excitement. India is a completely different kettle of fish, and we'll talk about it. But globally, I think more than any bullish pattern, I think it is simply sideways consolidation, which is clearly on. There is no panic, there is no excitement. It is simply what happened to benchmark indices, let's say, a couple of weeks ago. They just slipped into a range and then they remain in that giant range for an extended period of time. I think that factor is at play.
Yeah, you're not seeing much of an elevated reaction, or for that matter, even in the pre-market rates for US futures. And that's pretty much the texture across the board as well. Even if you were to take a look at how Asia, for instance, is panning out, there's not really a whole lot to draw from there. Of course, Japan and Korea are really, holding up very, very smartly, but that's not the case with the Hong Kong, Shanghai, or for that matter, the other periphery markets as well. So yes, once again, the GIFT Nifty is indicating a very mildly positive start, but I guess the headline number continues impressive.
Absolutely, and that's what we're tracking here on D Street. And yes, the 20,000 print was intact, at least for yesterday's trade. And you did see the rebound coming in across the board, so it wasn't just isolated to the frontliners. By the time we wrapped up the trading day, even the small cap index, actually, barring the mid cap index, managed to eke out a gain of about 1% or so. So you did have it across the board buying, but barring auto, you had and IT, it was pretty much all the sectors that really participated. And in particular, it was notable that the PSU banks managed to rally hard and fast, incidentally the most since the 3rd of March that we've seen. But what's the trend when it comes to the liquidity situation? You did have selling that continues from the FIIs. For instance, in the last 10 sessions in the cash market, the FIIs have sold close to 10,000 crore rupees, while the consistent buying, Nikunj, for DIIs, that remains intact.
See, Avan, first you got to say that, okay, what happened on Monday versus what happened on Wednesday, complete mirror image. The snowball effect of that brutal selling on Tuesday has not translated into an ugly reality. So we did see a bounce back in mid and small cap stocks, but in particular PSU stocks. So there are a couple of constructions. So the scenario, I think, is very visible that small and mid cap stocks, which were in this relentless rally, that rally has hit a pause button. And now you will see volatility. So linear move in some of the defense, power, railway stocks, what we saw as a linear move, I think will now become a volatile move. They're not going to fall, but I think they will turn volatile. And we've already seen traces of that in yesterday's price action. Then you look at large cap stocks. I think a rotation from small to mid cap is on. If I look at brokerage reports, if I look at the positioning of the market in the last couple of days, the margin of safety and even earnings upgrade, everything I think is there in large cap stocks or semi large cap stocks. That's where I think the market puck is moving, and you've seen evidence of that in the last 2 days, that how smartly large cap stocks have outperformed. Within that, I think it's banks, and within banks, since we are talking about momentum would be there in PSU banks, and the real trend, I think, would be in large cap financials. So large cap financials will lead the market mood, but they will not be percentage gainers because they are large in size. The spikes or the outperformance for a trader and for an HNI investor will come in PSU banks. So the template, I think, in a sense, has been is something what we've been preempting, that the craziness in the small and mid cap stocks, I think, has hit a pause button. Large stocks are looking attractive, and within that, banks have potential to outperform.
Yeah, and that's